So how long you been trading?
I've been trading on and off for probably over 10 years, but futures just a tiny bit of that. Usually things like stocks, options, and penny stocks and various things.
What got you over to futures?
Well, I was doing okay on options last year and just sort of started getting crazy and blowing the account. And I think I actually found Mike on LinkedIn. I don't ever use LinkedIn. I think I was on there for a while, and I finally like, well, I'm going to click on this and see what's going on here. So I found Mike in the room here, and then started seeing the profits, and started seeing a lot more interest out when I started doing searches online about futures. A lot of people switching over to it for various reasons. So it sort of gained my interest, and I started looking more into that probably a little bit later in the year last year.
Okay, so were you trading some indexes or anything elsewhere, or did you start doing that with futures, or are you not even trading the indexes at all?
No, just the futures. I was doing options right before that, and just had a bad turn of events after a pretty nice run. So thought I would explore futures since there's none of the Greeks and time value and any other things to worry about.
Okay, yeah, that's great. Um, okay, so do you want to just dive in and tell us about your trading style? And again, everybody, none of this is telling you how to trade. You can get some ideas here, but this isn't financial advice or anything. Just a little
Sure.
disclaimer.
So my trading style, I'm probably more scalping than anything, trying to find weaknesses in market structure, areas off of major support resistance. Primarily, I like to play reversals to the short side, regardless, or the opposite of what the market is doing at the time, just to get some of those quick moves. I'm trying to go a little lighter and get more range moves or trend trades like Mike always does, but I'm still primarily on the scalp side.
Okay. So when you're taking moves off support and resistance, um, you taking a scalp from support and resistance, or do you find yourself in the middle of support and resistance looking for scalps?
I'm primarily working off major support and resistance levels, and I've started adding the volume profile, so point of interest, point of control, and some of those things. So sort of combining those together.
As the entry? As the entry? Is that what you mean?
Oh yeah, yeah, as the entry on either the high for scalp or low short, or for the low for scalp long.
Okay. So it's fairly discretionary trading after that?
Yeah, pretty much. I just tried to route it up to a level and just get out while the candle, basically looking at the algo moves on the candles, so it'll flick up real quick, then I'm out.
Ah, okay. All right. So the candle flipping. So you're looking for a little bit of a momentum move, but you're not wanting to sit through much of a rotation.
Exactly. Yeah, I've added a few things to my charts just to show more of the momentum, so you can see where the volume's building, then take it up till it starts slowing down, and then just exit.
I see. Okay. Yes, I mean that's a good place to take it from, and I can see how it's sort of there's a boundary there. I think people that you have to break through if you're going to be looking for a trade that you're holding or pushing to hold, um, and that's obviously sitting through the rotations.
Hmm.
But to have the confidence to do that, you're going to have to uh, build some muscle memory and some exercising of likely destinations. So it sounds like you're determining your entries, which is great, off of major levels, and you're waiting for the momentum of the buyers and sellers to subside, which is a great technique for scalping because you are waiting for an area where you can expect heavy buy or sell pressure. Um, but sitting through that is definitely going to be based on if you can find some targets that are reasonable based on the time range that you're trading, which is, I'm assuming, only intraday. Uh, So based on the time of day, the current volatility of the market, using those same supply and demand zones to determine your exit would be the way to a way I would recommend to approach it. But again, you're going to need to build that confidence so you're willing to sit through rotations because you're never going to get a trade, or I shouldn't say never, but it's going to be very rare you find a trade that uh, just goes from one supply to one demand zone, major supply and demand. um, without rotating first. It's not just going to shoot up and just not pull back. And you're going to have to sit through pullbacks that are large the further you go. Um, that would be the line in the sand from going from scalping based on pure momentum, where once the momentum stops at all, 5, 10 seconds of momentum stopping and you're out. Um, at that point, you have to plan yourself what your target is ahead of time. So, do you do much back testing?
Back testing, no. I don't. To be honest with you, I don't really know how to run the software through back testing for certain models.
Okay. What platform are you using now?
I'm using MotiveWave.
All right. Motivate definitely has some back testing functionality. I'm sure I could help you offline. I'm not going to go through that here now, just because I haven't been using MotiveWave in a little bit, so I'd be a little bit off my game there. But something like TradingView, free for everyone for back testing. I recommend just learning the basics of some back testing so you can build that muscle memory and that confidence to hold. Because until you have the confidence to hold, you're just going to be not, you're going to be struggling with it and you're going to doubt yourself all day long because you're going to have trades that don't work out, trades that do work out, and it's more than just based on did volume cut out temporarily.
Okay.
Can you see
Yeah,
my?
I've also been trying to scale down size, like to just maybe 1 or 2 contracts and hold more, to like anywhere between 5 to 20 points, just to see, like you're saying, to build those confidence areas.
Sure. Um, the the thing I would not recommend actually is just having a set number of points for your targets or the stops for that matter, because that has no representation that's correlating with volatility at all. So if you're having a small range day, um, you're not going to want to have the same amount of points for a stop and target necessarily as you would when it's trending or you had a big uh, overnight balance, big range. You need some mechanism, which I usually jump for ATR is a pretty good uh, way to determine the volatility or recent volatility. Let me see here though. But those targets, like you do want to lean on major structure to find targets, and doing this yourself is a really good way to, hang on 1 second, to start believing in what you're doing. Is this not? Oh, I'm on Crankle or something. Sorry, everybody, we're fumbling. I didn't know I'd be doing this. Matt's got cut off. Okay. So what I'd recommend is learning this in Motive Wave, but for now, just to show you what you could be doing in any platform. Pull up a platform, make it so you can't see what's going on, so you can flatten this out or something. Go to the left. Don't pay so much attention to the date or time on the chart, but just make it a random time in the past, um, far enough back where you don't know where you are, what's going on. And I'm sure you're drawing supply and demand levels for your entry, somewhat similar to this, where you're trying to find, again, this isn't, okay. But let's say you have draw draw the levels as you see them. Just don't overdo it. Just start building what you see and then watching the market play out at those levels like this, right? So these pullbacks, people call them all sorts of names. Keep it just supply and demand, areas of interest, major ma points where you know big size is going to come and either buy and sell it or capture price again, and price becomes it goes in a range and you start building value in that range. But the point is, if you were waiting for those uh, supply and demand levels as targets as well as entry points, you'll start seeing that your levels, as simple as they are, will start playing out, and over a time frame, like this is an afternoon. If I can go further back in time here, I'll just go forward. Start building these areas where the market turns. The more major, the better. That pretty big area, but so let's say you're going in a short here, right? If I don't know what your entry parameters are, and it's not so important for the sake of this exercise, but if price was rejecting in this area and you were looking for a target for a short here, this is a reasonable target, right?
Yeah.
This area or possibly this as a shorter range move. Start doing this and expanding on where your targets are going to go. And even if you continue to just forward test and you scalp and you take your exit maybe here because momentum stopped here, watch it play out. Again, it might not hit it, but you'll often find like that, look right to the tick.
Mhm.
You do this enough, and then when you're in the trade and you're trying to transition from that momentum trade to a further target, you'll start seeing it play out, and you'll be able to have that muscle memory where you go back to this time when you were back testing, and you can go, okay, no, I know how to play my levels. I have a high probability that if it goes in this direction, it's going to get to this area, so I'm going to hold the trade until that zone. And that's sort of just a very simple. Again, I didn't think this through before I had this little talk, but do this over and over again. Again, if it rejected here and it came back here, you found a scalp here, let's say, for a long, take it back up to this zone that you determined. Start learning to stick to your plan and just do this a ton. Just go back, do it. There was a time where I would spend hours and hours every night, and I still do it quite a bit, but I would spend so much time just back testing just to get this just engraved in my brain. Give me the confidence of when I'm drawing levels, like this level right here. Like if price got back down to this right here, taking a trade to here is a very reasonable target. And you start to learn, it might not come down because we're probably, yeah, I'm just peaking here. It's the end of the year last year, so we're just going up. So yeah, that I think that's a good way to transition now to larger targets, but do it based on a plan, not based on points and not based on purely momentum.
Okay.
Sorry, I'm rambling a little bit, so feel free to interrupt me if you have questions. Anybody in the chat either.
No, I think it's good advice, and also like sometimes on scalping, I'll go a little larger to get that momentum. I guess, and I usually exit the whole position, so I need to start, when I do that and combine it with the larger ranges, like scale out a half or two-thirds of the position and let the other portion run to the target, like as you're saying.
Yeah, I think that ends up being something you want to keep track of your trades and keep track of maybe the what if scenario. So whether you're scaling your trades or not, or waiting for that target, log it as if you did wait for that target and watch what your P&L would have done if you would have made that different decision over the course of several, a month of trading. Um, and that's always a good way if you're making a major change in the way if you're doing well and you're making a major change to the way you're trading, um, you can ease in that transition to that new style of trading or new style of risk management by, um, you know, forward testing and logging what would have happened based on that decision. Uh, But doing that stuff, it sounds so boring, and it is, but you just can't compete with recording the statistics and then reading the statistics and believing in the statistics while you're live in a trade. That will curb many of the emotional problems people have if they can just build the confidence up and know, no, wait, like they're getting nervous, they want to get out of the trade, they just want to take all the profit because they had three red trades before it. But in that moment, when you can remember to stay in the trade because you've seen this play out, you've done the work, it makes a pretty huge difference to your confidence and the quality of the executions. But yeah, again, we say this to people and people just don't want to do it. And so that they go into the market shooting from the hip and hoping for big green days to just fix everything. Um, and it doesn't work out that way. get trapped. Someone was talking about they like to have a trailing drawdown on the eval accounts because kept from learning to hold trades. So I would definitely say if you're planning a trade and you're looking for a long hold, and you're trying to oversize, you're gonna have to have uh, it's gonna yeah, it'll mess with your trailing drawdown. The drawdown's gonna come up on you fast. Um, but that's usually due to oversizing. No one wants to play with micros. We're trying to push people towards micros. Um, but you can always size down if you need to increase your risk, uh, which risk is a number in dollars, of course, but how many points for those dollars? So let's just take the extreme. If you're going to take a trade here, a lot of people would look for a stop just below this mark. Um, and they would probably force themselves to do that because they're using way too much size. If you took an extreme case down to 1 micro, you would be able to take quite a big of a swing here on the ES. 50 point, I mean, 20 points wouldn't be unreasonable for a move that's maybe 40 points, from taking a trade like a lot of people would take this. So first time would make a new low with that kind of a trade. And that would be that's exciting in hindsight, but realistically, giving this thing enough space becomes this, and that's still a great trade. You're still doing what is that? 1 to 1.7. Obviously there's way better risk reward scenarios, but 1 or 2 micros on this, and you're doing this all the time. Start building up size. Um, Trailing drawdown stops being a concern. You'll be out of the evaluation before and into the brokerage uh, eventually, and that all stops. And at that point, you start sizing up more and more. Get yourself on a pattern of actually having an increased P&L and not trying to just pass this thing in a day. Oversizing though, you end up doing some risk reward that's just asking to get chopped out of the market. So just be careful with that. What else we got? Yeah, Raj there's typing in the chat, divide your drawdown by at least 5, maybe 10 days. Totally true. Josh, how do you get the risk reward to come up like that? I can never get it on my trade. It's right here in this panel. Long position, short position. Can you show us how to use read that word, it's under the heart. What's that say? I'm gonna type something. Super professional stream, everybody. Can't read what I said. ATR. Okay. A lot of different ways to use the ATR. You could use ATR in the 5 minute, et cetera, et cetera. One way I always like to use it is definitely take ATR, get the daily ATR, and use that daily ATR as a number. So this is a 14-day average true range based on the daily range per day. If anyone isn't familiar with ATR, you can use this to project your expectations for the day on a trade. So if I were to look for a trade, again, this is daily chart, and I'll just go to the day or something. Right now, we've got 56 points on this ES. So if I were going to take a short, let's say tomorrow, right at this time, and I know the ATR is 56, and let's say um, the market's already moved 30 or 40 points for the day. If I find a target that's maybe 30 points above the area I'm not going to treat that as a reasonable target because that would go over the ATR. fairly well. I'm going to look for something that's more in the 10 or 15 points at that range. So it's I guess it's a way to figure out what's your point budget for expectations for the day. Again, if the day starts off and we're bottoming immediately in this area, and I know the area TAR is 56, I might look for a 50-point move up if I'm looking for a long. But I'm not going to push it and try to hold a trade and add to a trade after it gets into this ATR of points that have been used for the day. It's a rough way to do it, but it increases your probabilities for what's going to happen. And of course, there's always going to be a day where, over here the ATR was ranging around 45, and then, you have this day and this day bounce up to 55. And you might not catch that whole move, but you're not normally ever going to catch an entire day from top to bottom or bottom to top. So that would be an example of using recent volatility to help determine your expectations on a trade intraday. If you traded NQ, how would you choose a trade today for entry? Um, it's not so easy to, again, it always relies on structure. So I'm not showing my personal charts, which are in Sierra charts right now, just because it'll be a lot of information to bring in. Um, but the market is there. You have to understand a lot about market mechanics before you do all this stuff. But the simple idea is, you're looking for points when the market was bought up or sold off, major points of buy off or sell off. And if you're being rough about it, obviously this is in hindsight. Don't pay attention to today's bar, but this would have been a reasonable place, and that is exactly what I had on my chart to look for sells and look for buys. It's not really as hard, much harder than that on the higher time frame. The harder part is finding good areas to risk off of, how much to risk, and what's your exit strategy going to be. Um, Again, this is in hindsight, so don't get too excited, but this isn't unreasonable at all that the market did this. And again, this was similar to what I had on my chart for the higher time levels. Um, so when the market comes in here like this, and you start looking for, there's buy ups, comes up in here. So now you start questioning, are we going to get rejected off this recent supply area? And again, I'm dumbing this down, just trying to kind of get a point across. Are we rejecting here, or are we going through it? Buying pressure's too heavy, or the sellers are moving their prices higher. Either way, it doesn't matter. Um, what are we seeing from the price action? What are we able to determine from the data that we do get? Um, so what you do in this area might differ from person to person. I find it very helpful just if only traders did this first, waited for this area. And again, this is sort of like John here. Um, he's doing the supply and demand levels. He's looking for a scalp here. Uh, you just need just enough confirmation, not too much confirmation before you take the trade. Came up, rejected down. It held this level, so now you start getting interested. You're like, okay, maybe we're going to continue through it. I'm not ready to short here when it rejected here. That's not enough. I would have wanted to see. I would have wanted to see price go. One sec. Yeah, I would have wanted to see price come down here, come up for a retest, and then look for a short. You know, somewhere. I can't. Bear with me. Here's the pin tool. Again, disclaimer for anybody coming in. I was not prepared to do a talk, but here I am. So right in this, painful for myself as well. Okay. Somewhere after retested here, I would have looked for a short, but it didn't, right? price came up, went tested the bottom of this supply area, went through. We barely broke it through, so I'm not necessarily looking for a long yet. We haven't fully accepted over this price range. I want to see that traders are or entities or whoever are comfortable trading price up here. And when price gets below here and gets into this previous range or supply zone, I want to see buying aggression pick up. And when buying aggression picks up, then I might join the buyers and look for a move higher. And if I'm looking for a move higher, I'll start looking for recency in the market to find structure. Um, so this would be on my chart for sure. Um, this is from a few days ago, a high. You're going to want to use these things to build your trade plan. So if I'm looking for a trade from here, again, I want to see it either go sideways here long enough where we've kind of accepted over here, people are comfortable trading price and nothing's ever going to be perfect, or I'm going to want to see a big move. I'm not going to chase the big move. I'm going to wait for it to retrace. And then I'm going to look to make sure that the buyers are still there. The buyers still interested in buying down here aggressively. And if they are, then I look for a trade there. Try to get kind of a breakout that after it retests. My first target would be here. I'd probably take some out here. That's 93 to 53. So that's about 40 points. 40 points based on our ATRs of reasonable full day. Um, so if the trading day started down here and we made a move towards this direction, I'd probably start looking for an exit about 80% of the way up, 80 to 90% of the way up. I don't necessarily, if I have a level, I'm not taking it to the tick. I'm trying to look for what's the highest probability of this trade uh, succeeding with a good risk profile. And my risk would likely be for a long, would probably be right here. Again, this would totally matter based on some of the lower time frame stuff, but you want to keep it kind of broad and outside of the area of getting chopped out. So if I have my risk here and my reward here, um, you know, not an amazing risk to reward there, but pretty reasonable trade. And there's nuances, you do this long enough and there's nuances and you can change your plan on the fly and have more discretion, but you really got to learn to earn that discretion and start by creating a trade plan at a higher level and just sticking to that trade plan and watching it play out. Stick to the trade plan, watch it play out. Uh, just keep doing that, and you're going to build something that you didn't have before. Um, a lot of people are just shooting from the hip, uh, using way too much discretion way too early, and that does not bode well when one, you don't have the confidence yet of what you're doing, and two, you haven't watched the market long enough, and three, you just maybe don't have the emotional capacity to do that correctly under pressure. And that's usually what those one of those three things, if not all three things, are what's killing people right now. They don't want to wait. They want to feel like they've got the ability to have discretion. Um, yeah. Let me switch to the comments. Choose to change a day. Thank you kindly. It's cold. You're welcome. Third time's a charm. All right. Anybody have any other questions? That includes you, John.
I do have a question. What do you find? Do you find the length of duration of hold time? People that are more successful usually have trades that last longer.
Yeah, I would say in the long run, the better traders I see have shorter hold times, and I don't mean like seconds. Again, I would say the traders I see that do well have the less than 5 minute on their losers, less than 10 minute on their losers, and 45 minutes on their winners. Kind of something similar to that. But trading's so varied, so it's varied and individualized. So it really depends on the trader, their style. I'm not gonna say that scalping is the wrong way to go by any means. I'm going to say that you do what fits you, and if you have something that's working, hone the shit out of it, and just make sure you understand what you're doing, and don't start switching strategies. Stick to that. Stick to something that you know has an edge, and refine, refine, refine. Stop looking at what other people are doing and just switching things. If you have one bad day, people tend to try to fix that. Like, well, what did I do wrong? And maybe you didn't do anything wrong. I mean, there's a chance you did something wrong, but you're either trading to your plan or you're not. And there's always going to be a little bit of discretion in there, but the overarching theme needs to be, are you trading your strategy accurately? Because if you trade a strategy poorly and then at the end you read that day and you're like, oh God, I got to fix this. So you do something, you start adjusting what your strategy is, even though it's not the strategy that's the problem. Uh, you got to take a step back and look at the broader statistics of your strategy, um, and not look at it as a single day. And that's how my strategy works now. It's either good or bad or good or bad. You can't do that day to day, and I know a lot of traders do that. That they struggle when they lose, and they try to fix it. They try to look to change everything, and it's really rough. It's a really rough journey trading if you get sucked into those kinds of feedback loops. You have to be trade the best you can to your strategy for the day. If you see something you're like, oh, maybe I shouldn't do it that way, that's fine. Make a note that night. Go back, look at your how that strategy would play out over time, over lots of days, and say, if I would have done it this way, would it have been better for my strategy? And then make a logical decision while you're not in the trade. Stick to the trade plan while you're in the trade.
Good advice.
Yeah. What are those levels, Josh? The levels, I was just trying to give a rough idea of how simple it can be to define supply and demand and how most people can see it. If you just pick a random time in history and look where the market makes major shifts and has essentially wicks that come out of it, you can find, okay, the market was trending up, and then sellers tend to always come in this area. Sellers, okay, let's mark off this area. You know, I'm not drawing the rectangle this time, but there's a level or a range of area. Buyers came in here. This is a pretty reasonable, right? So now you can start going back in history, and if price comes back to that level, which apparently it never did because the market's just rallying, but you'll often find this is a great way to come up with, I'm waiting for trades to come into this area. I'm going to wait for direction because it's really hard to predict direction extremely ahead of time. You have to see how price reacts in there because there's going to be buyers and sellers that has limit orders on for sure. You can see that liquidity, but that liquidity doesn't necessarily let you know which direction it's going to go because there's way more liquidity that's not sitting on the books. Um, it's just going to be a bank sitting there like, okay, we want to get 20,000 contracts purchased here. You have no idea, and they have nothing on the books yet. You know, you have no idea what people are going to do and which direction it's going to go. So you have to get really good at finding clues to which direction it might go or probably will go. That's all we can do. So when price gets to this area, now I'm interested. Now I'm looking for how's price reacting to this area? Is price accepting? Are the buyers still showing up here? The sellers still showing up here? So now we're in a range. Then I'll be looking for range trades from the top to the bottom, or vice versa. If it breaks out and it goes through the bottom here substantially, then I'm looking for a short. And where am I looking for a short to? That's right. I'm waiting for a pullback, some sort, and then I'm looking for a move further down. Sorry, looking for a move to the next area structure, which I would have already planned out. And you'd start looking for, sort of nothing super clear right here, but you could definitely say, you know, and if you want, don't even color these things. That way you don't have a bias of where it's going to go. But price coming down here, I'll be looking for a target here. And more importantly, what's my risk? Where's my risk going to be? Probably about halfway through this area. I'm going to assume that there's sellers here that are still defending when it's doing the pullback, and I have to give them a chance to continue to sell. And they're not going to want to necessarily continue to get the same price down here. They're going to want to pull their offers up, maybe just far enough so they can get the best price before the market moves down. So having a risk reward profile that looks something like maybe my entry would be here, maybe risk here with the target in that zone, right? And then again, we could look at the ATR, which wasn't so hot back then on a 15-minute candle. So these are 15-minute ATRs. If I switch to the daily candle, the daily ATR back here was, this is November. We got 280 points on the NQ. And yeah, try to read this. Anyway, you get the idea. So this would be daily candles. So you wouldn't really want to take a trade here. If you were swinging, this would be a regional trade down to here. But to expect the market to go from here to here in a single day would be unreasonable based on the ATR, right? If you just eye the candles, you don't even need the ATR. You can see like it would have to be an extreme day, more than any extreme recent day, to make a move from here to here. So if you're overholding and you're like, let's see how far this will go, et cetera, your expectations shouldn't be a move this large. Um, you'd really want to be looking for a move, you know, which doesn't make sense, but you know, something much smaller based on the ATR. Hope that makes sense. All right. Anybody else have questions? How about you, John?
Um, do you find that new traders, or it could be experienced traders,
Uh-huh.
tend to do better trading higher volatility or lower volatility? I know me personally, I like trading later in the day when the volatility's dried up before power hour. Like
Hmm.
early in the day, it's just harder for me to hold those moves when you get a lot of candle wicking action.
Okay. So if it really it depends on the trader. So again, increased volatility means you need to increase your stops, right? And
Mm.
if you're struggling in higher volatility, it's probably because you either have a very tight stop on your trades, and maybe it's point based. I'm just guessing based on your earlier remark. Um, but if it's a point based, I mean that by definition you'd have a tough time. If you kept the same points for your low volatility entries as your high volatility entries, sorry, trouble saying that. Uh, you're gonna get stopped out more. The market's gonna move more against you just by average candle size, right?
Mm.
Um,
Exactly.
so if you're struggling with that and you're still seeing trades, again, try not to get as greedy essentially and reduce your size and increase your um, stop range.
Okay.
And I would experiment with that. Uh, I would also say there's some traders are always looking for that continuation. They're looking for a trend, um, and they're going to hold and continue to hold and continue to add, and that might work out statistically. And if it does, that's great. And but as most of us know, 4 out of 5 days end up being range days, right? So identifying market ranges and um, learning to trade ranges, again, give it ample room, but short the highs, long the lows until the market stops doing that. And if you give it enough of a area to move, you can often do really well regardless of the volatility. One way to use ATR for range day is take the ATR, um, take take where the market open was. And again, this doesn't work perfectly, but take the current ATR where the market open is, and just draw an ATR up and an ATR down and get a sense of what's getting extended to the bottom or the top and look for reversals in those areas. Again, that's a super broad idea and that's not a strategy, but it is a way to look at the market based on current market conditions. And of course, a lot of it can be common sense if the market's it's just been running, and you're just looking for a short-term scalp. Like if the market's going up, continue to look for longs, look for dips in the market, wait for those dips to be done with, wait for enough confirmation, which people have trouble doing. They want to take every leg down every time, and then they just eat their accounts up. I'm sure everyone's been there. Uh, Wait for a substantial change in how the market's moving, not the first reversal candle. Um, yeah, so if you do that, um, it's sometimes some things are common sense, some things are so nuanced I can't even explain it with words. Um, but yeah, you can take those hints with volatility. Volatility has to be used in your trading plan because the market's not always going to be the same day over day, month over month. The market's constantly shifting. So so figure out how you can shift with it and not force the same thing you've been doing month over month all year round.
Okay. Yeah, definitely sizing down can help dramatically.
Yeah, and I would definitely in poker you're going to want to size up when you know you have pocket aces, right? And you want to get there where you can really recognize an A plus trade over a B plus or a C or a D. A lot of us can determine this is a really good trade and this is not a really good trade, and that's often enough. But I would say learn to risk the same dollar amount on every trade for now and adjust your size based on how much range you need for that stop. And don't, I would say another thing would be don't, a lot of people are just taking tight stops right below structure, like the first tick underneath it. And then if they want to give it more room, they gave it just enough amount of room where it's not necessarily the market's no is not showing that it's negating what's currently happening. Like if it's pulling back like this, um, and it does a pullback like this, that's a reasonable pullback, right? I mean, people can use fibs, whatever they want to get a sense of what's happening, but don't just place stops like a tick underneath everything all the time. Everyone knows what happens when you do that, or even either just get out when it makes a tick below. That I get that, and if that's part of your trade plan and that's working out for sure, do it. But when you start trying to give it just a little bit more room, you're really playing with not really increasing your probability very much more. But if you give it a substantial amount of room based on the current volatility, where it would really have to do something to negate the trade, you'll find your probability will go up on your win percentage, which is good. Obviously, you're losing more because you have your risk, but I think it's a good place to be for especially newer traders. Don't try to over maximize your stops compared to your targets yet. You'll get there where you can start doing that, but for now, just take wider stops, get used to being able to plan and watch that plan come to fruition, and don't oversize, or you never have enough time for your statistics to play out. You're everyone's kind of betting on like a 5 win streak to finally get them through an evaluation, but that takes you nowhere once you're done because now that 5 win streak's exhausted and your statistics screw you over when you lose 2 days in a row. Um, that's not a way to trade. It just doesn't work. Do we have anybody waiting in this Discord room, Raj? Let's see. In a second. I'm going to join this coaching channel. I don't know if you got an invite for it or see it. Who wants to hop on stage? Raise your hand.
So you guys can raise your hand to be invited to the stage.
Hello, sir.
Yo,
How's it going?
what's up, yo?
We're kind of pushing in here to 5 p.m., but let's just do another little round of coaching here. This is on the spot, not planned. So let's roll with it. What how's your trading been going? Hello, sir. I can't hear you if you're talking. We're kind of pushing in here to 5 p.m., but I hear me on your YouTube. On the spot. Well, John, do you want to have another question while we're waiting for him? Raj, can you still hear me?
Oh,
Oh,
hello?
hello.
Yeah, now I can hear you. Yeah, I couldn't hear you.
Okay, you hear me now. Great. So yeah, do you want
Yeah.
to how's your trading been going?
Oh, man.
Yeah, not good.
I'm just, it's just that thing that I struggle and I don't know what I'm doing wrong. In
Okay.
my mind, I think I'm waiting and waiting for my entries. I plan for to enter them and I keep with my plan, but all the time, and I end every trade is with my stop loss. I don't. Every trade is in plan with the stop loss. But somehow all the trades I'm getting in, they get slapped. So if you can look, I think you've been seeing this, but I've been sending my trades in the chat. So my trades are just stop loss trades. They're not just like huge lows and like so like somebody suggested earlier. I divide my daily loss limit by the percentage of risk management. So our loss limit now is 2000,
Mm-hmm.
2K.
Okay.
So I divide that um by to take a loss to about 120 points each. So I'm trading with one contract,
Okay.
and that roughly gave me about 16 trades that I can make it or break it.
Okay.
Um,
Okay. And you're
Now
you're using full size contracts? Is that NQ, ES?
full size one contract.
Okay. NQ?
Yeah,
Are you on NASDAQ?
only NQ.
Okay.
Only NQ.
What
I
one
trade oil sometimes with.
so are you keeping to your risk for the day? Well, I mean, we'll start with the risk management, work backwards, but are you are you
Yeah, but obviously 16 stop losses in 3 days, my account is gone. And then just like that, it's gone. Like, I can't. Everything happens so fast.
yeah. Yeah,
Uh,
you really wanna I would really up the amount of days that you're able to stay in the account. That's one aspect of it. It's just I know it seems super slow and you probably have to switch to micros. In fact, you will, but make your risk management work where you have 7, 8, 10 days in that range of days to trade. It's going to feel really slow because I'm sure you've had days that were big winners and you keep thinking back to that, but that stuff isn't sustainable. It's just not. So you need to figure out where you can sustain that many days of losing in a row and your account is still okay. Yes, it's going to impede on the amount of profit you're making, but it's going to put you in a better space in the long run. So that's one part. That's the risk management. The other part is what are you doing? What kind of trading are you doing? Um, why are you needing to take that many trades in a day?
I trust me, I want to have just two or three, maybe max, trades in a day. I can say that mostly the ones, when I plan and I wait, and I think it's something that I plan and wait for the trade to happen, wait for the trade to happen. I get into the trade, it hits the stop loss, it goes back in, and I say, okay, well, the trade was good, but it hit my stop loss, so I get in again.
Mm-hmm.
And it plays the games, plays the games, and then it hits me again. And then, okay, I'll wait now patiently, and then again shows me that my entry was right. And then I get in again, and I get slapped again.
Mm-hmm.
And it just, uh, and then, okay, I'll walk away, come back in an hour to find out that my planning was correct, and the trade went. I made my calculation that with one contract to find a play for 50 points will make my day, So that's what I'm kind of looking. One contract, 50 points. Um,
Yeah, I get that sort of gets
the
back
end,
into. So you're saying one contract, 50 points. What do again, a very specific number of points isn't always going to work. That's you forcing the market to
oh
do what
no,
you
no,
want.
no. I'm not looking for the points exactly. I'm just
Okay,
saying that will where I will stop for the day.
I see.
No, I'm trading. I'm not trading the price. I'm not trading the how much money I'll make. I'm trading the chart. I've been told that to trade the chart, so I'm not. Probably the other thing is that I'm not looking to the PNL till it's too
Well,
late.
one thing I've lacked to
I'm
hear
trading the
yet,
chart.
what are you actually looking for your trades? Like, what is your, oh, you don't have to get so specific, but you're saying you're trading the chart. You'll stop at 50 points, but what constitutes a trade that you would take? What does that look like? When you sit down at the computer, what are you looking for to get entry on?
So to have a reversal, so it's a move down. They hit a previous low, and then I'm waiting to get in for the reversal to go up.
Okay. What type of time frames or how are you looking at
So
the charts?
if you look at the charts, you can see the entries on this here that I've sent, and those are, on the I'm trading with Quant Hour,
Hmm.
and there you can see those little lines that I try to get in for a reversal for a long. And this is typically one of my days. I'm trying to get into a trade that I
Okay.
planned for today, and I get slammed, slammed, slammed.
Definitely looks like so you're look so um, it's hard to see what you were doing here, but I can see. Can you see my stream? Or am I not streaming here? Hang on.
Oh, you're not streaming.
It'll be delayed on YouTube, so hang on one moment. Is that it? Okay. You see that?
Yes,
Okay. So it looks like your first short was here, this range.
yes, that's why I try to long that.
Okay. And does this yellow line and blue line, do they have structural meaning to you where you've prior
No,
to
the
this?
the the blue line is the low of the day.
The blue line is the
So
low of the day so far. And
yeah, so that
what
was
size
the
are these candles?
5 minutes.
Okay. So you're looking at for 5 minutes.
Yeah, so that went
There's the low of
down.
the day. You took a short here.
I took the long there. It didn't work.
Oh, this is a long?
Yeah,
The arrow down? Okay.
I don't know how they work.
Okay. It looks like maybe you'd long here.
No, sorry, that was the short, and
Mhm.
then that's the stop loss.
That was a
Yeah,
short and that was the stop loss. Okay. So it came back
yeah,
towards break even and you got out. Um,
yeah. And
so
that was
when you took this, what was your plan? What
so
was your reason for entering? What was your plan? I don't have probably enough information to go on with it, just this, but let's start there.
so that was he break the previous low that is on the left side, right on the left side candle, that green candle low. Yeah,
Hmm.
that one. Yeah. So he break the low there, and then uh I waited to go to the midnight Asia low.
Is that where the
Yeah,
somewhere near here?
yeah,
Okay.
the blue one. Yeah,
So and it didn't, of course, and you stopped
it
out.
didn't, and it come back and I get stopped out.
What
Yeah.
were you willing to risk here?
So again, one contract.
One contract, but how far? Because that multiplication is going to determine your dollar risk.
So my stop loss is at 5 points.
5 points, and I don't know what roughly this is. It's more than 5 points though on the NQ. If these are 5 minute candles for sure, right?
Yeah, yeah,
Okay.
yeah.
So 5 points again. If you're risking 5 points, and over the course of 5 minutes, a candle is generally maybe I don't know what 5 points is. What's the ATR on the
So 5 points
5 minute
is
AQ?
my is my risk ratio to
20 points.
120.
Okay, so the average candle for a lot of this stuff is probably going to be um, 4 times the size. Average ATR is probably. Let's just assume it's this candle, and you're risking a quarter of it.
Oh yeah, that candle is 15,
So you're
15
expecting it to take off and not even pull back a candle. Let's assume that, right? If you're taking lows or the break of lows for using 5 minute candle structure, and the average 5 minute candle right now is 20 points, and you're risking five, you're willing to for a quarter of that candle to pull back before you stopped out. Do you understand that math?
Yeah,
So if you're waiting for a quarter of the candle to stop out, it's going to be very aligned with your situation and the problem you're experiencing, where you tend to get chopped out a lot, and then it goes in your direction.
right.
And I know we want to all maximize risk to reward, um, but with what you're doing, you could do that if it works out, if the statistics are working out for you, but you can't be upset about it because you're going to have a very high probability it's not going to work. Because when you start getting to the 5 to 1 area, 4 to 1 risk to reward, you're going to have a lot more failed trades. It's just how the market works. The market's constantly ebb and flowing up and down, and it's retracing constantly, and it not retracing a quarter of this 5 minute candle isn't a. You'll find that. I mean, this could have worked out if it just went to your target. I get it, but again, 5 minutes is a quarter of a candle. Um, so just expect to not always be right. And if you're okay getting back in, then you're able to get those big moves, and over time your P&L curve's going up. More power to you. But you probably want to get a deeper grip on what those statistics look like and if it's worth it what you're doing. Are you actually finding really good entries where you can only risk a quarter of a candle and win enough where you're not screwed? And I would say for sure if you're oversizing during an evaluation with a trailing drawdown or trailing drawdown or not, um, you're going to struggle with exactly what you're struggling with, where you're going to be losing evals left and right. But if you actually have an edge, and let's say you can at the very least go a little bit over one ATR, you know what I mean? That would put you in this range. Again,
Right.
this isn't an example that would have worked out for you, but you're going to have a lot more success. Like, if you took this candle break and you went underneath the candle here, I don't know. It's something you need to look back at your own trades for. We don't have that all your trades up, but you can definitely just look at this. You should be looking at this and realizing, well, how could I predict this 5 minute candle didn't have enough noise to chop me out? Like I'm not surprised with how fast you're getting in and out here that you are getting chopped out. And then hopefully
Yeah,
one of
so I
these just
knew
goes without you and you don't have to worry about it. Sure.
I've
But you
been
do.
planning that will go for long if the target for the low did not hit,
Hmm.
then I plan for the long. But the long I took the trade. I took the long. I knew we're gonna reverse for the long, and you can see the trade could be easily 50 points, and I could be done for the day. But
Sure.
it got stopped so many times. I got frustrated that it just couldn't let me stay in
Yeah,
the
yeah.
trade.
And again, if you can find those big wins and you're understanding your risk to reward, because having a set risk is tough, but it does give you math to work with that again, you need several days in order for the statistics to play out where you're going to catch something that just goes and goes and goes and goes and goes and never pulls back. You know,
And by the time
the
it
further it
got
pulls
there,
back, the more
I
likely it is to come back and stop you out. So, um, your target being
yeah.
further away gives you a higher probability that it's going to swing down before it swings up higher, if that makes sense. Just as a simple way to put it. So again, if your stop was larger and you're still looking for larger, you're going to get more wins. But if you can't sustain the losses, you're going to. Here's my point: if you can't sustain the losses that it's going to take to be able to always get your large win in before your account blows up, then you are going to be stuck in this loop. So you either need to switch to micros and play with what you're doing, or start increasing the amount of risk you're giving it, so you have more winners.
So in the end, I can say if my risk based on risk management or based on the candles and the market structure and the position of the price at that moment, because you can say, okay, I can put my stop loss under these candles,
You can use
but that
candles a
doesn't
way to do it. That for
reflect the
sure.
risk ratio.
Right. Yeah, candles a way to do it. So it's structured, but again, I was talking this before. It price very often goes in back and retests the bottom and highs, or the lows and highs. Uh, that's just part of how the market moves. So when you're right underneath it, obviously you're cutting your win probability. So it just all matters if the risk is worth it. But again, if you can't take enough trades statistically to handle the losses that you're going to have to take doing a strategy like this, you are always going to fail your evals, and it will happen fast. So that's no surprise. But your P&L curve right now, with big wins but lots of being chopped out, it's gonna. I don't know what's going on with this here, Raj. Um, but if your P&L curve's, let's say, going down a bit, right, then you get a big jump, right, and then you
Yeah,
lot chop 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 chop, big jump, chop 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 chop. You're doing this, and you can't sustain whatever this is in losses. Does that make sense? Like this is where you're failing, right? And maybe you don't. Maybe you're going loss, 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 loss. You know what I mean? Because the
yeah,
the
that's more like
distribution of losses isn't always going to be linear. Um,
that's
so
more like it.
yeah, right. But then you catch a big win. This could work, and then you have two losses, and then another big win. You're having a streak, then you have loss, 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 loss. Like the way
That's
you're trading with
exactly it. That's how
that's.
the
Did
graph
I draw it? Yeah.
shows on the dashboard.
Yeah, so like, right here you're getting lots of linear losses in a row, and then all of a sudden maybe you start a new eval here, and then you started out with a big win and lost this big win. You're like, holy shit, I know what I'm doing, right? And you pass your eval, and then maybe you're in funded. But when you're thinking on when you're planning it this way, now you're in funded, and guess what you're doing? Emotions are higher, loss, 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 loss. Now you're out of the account, right? So if you reduce your size, you're going to do this, but it's going to be more like if this was the same scale, right? It's going to be more of like this, and your big wins are going to be like that, right? But you have the drawdown to make this work out over time. Again, that's assuming you want to keep trading like that. But your wins won't be as big, but your losses will be smaller. And because your losses are smaller, you're going to stay within your trailing. Does that make sense, or did I overcomplicate it?
Yeah, yeah. I'm
So if
just
you
thinking the same time to keep the loss a big, uh, to have a larger loss limit in order to not be caught so many times.
Exactly.
But
So
you
you
never
start
know.
increasing your sorry, go ahead.
You never know if the last loss will be your last trade.
Yeah, yeah, and you should never be near that. It sounds like you maybe just you got into that space for one reason or another, going through evals. But what I would say is you have this, let's say this is your drawdown, right? And this is your P&L again. If you start increasing where your stop is, you're more than likely going to see, again, less losses, but not as big of an up move. You know what I mean? Every time you increase your stop range, you're gonna, um, sorry, your up moves are gonna be closer to your down moves, but you're gonna have more of them. So you might have down, 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 and then your up moves like that, down, but you're gonna get a smoother P&L. Does that make sense?
Yeah. Right.
This can end up being more money. This can end up being a ton more money, but you have to be able to, one, psychologically deal with that much of a drawdown for that long of a period, because you know eventually you're going to get a large winner, which works for a lot of people. Or you start increasing, your stop distance, reducing your size a little bit to cope with it, and again, you start getting maybe more like this. Maybe that's a little bit easier on you, and definitely more likely to actually stay in the game. But
Yeah.
yeah,
Of course,
so
aside
something to
from
think
that,
about.
is that pressure to keep your blue life alive as much as you can, and
Yeah,
that
don't.
pressure of not losing, and then you make more. I made more losses just by making sure I'm not losing, if that makes sense.
Yeah, I get it. And again, there's people are trading the eval, right, to
Right.
blue live,
Sorry, let
and
somebody else to
then they're
speak.
failing.
Maybe they want to add
Oh,
something.
sure, yeah. But what my point is,
Cheers.
like,
Thank you.
this is the goal. Like, don't get stuck in the eval passing as hard as you can with whatever it takes, where you don't have to really worry about your long-term statistics, and you don't have room for streaks of losses, and you're just trying to get through it. This is what you need to be thinking. Like, you get through blue live, like you're trying to get here. You want to just keep being able to grind and grind, and your P&L's gonna do
Yeah, I'm
this.
definitely for long term here. You're not gonna get rid of
Yeah,
me so quick.
good, good. I'm glad. Um, but
Right. Nice,
slow
nice to
down.
speak
You're
to you. Thank
welcome.
you very
Yep.
much for this.
Let's see. Does
Right.
anybody else want to come in?
Cheers. Cheers.
Cheers. You just raise your hand up there or type in the chat. I can invite you in. Or maybe everyone's just bored. We got Riz. Riz, you there? Hello. Alright, try this. G. Hello.
Hello, can you hear me?
Yeah, how's it going?
It's going pretty good. How about yourself?
Pretty good. So I guess let's get right into it. How's your trading been?
It's been a struggle, but starting to see a lot of progress. I've recently taken a break from the prop firm challenges because I kind of was turning into a little bit of a gambler. So I've recently gone back to the sim and really just trying to really um, work on following my rules and kind of defining my setups a little bit more, so it makes it a bit easier to be more selective with my trades because I'm a little bit of a serial overtrader.
Okay.
The one thing that I feel like I'm really struggling with is kind of like where I should really be focusing in my journaling and in my review,
Hmm.
I feel like a lot of it's very inconsistent.
Okay. Um, when you're journaling's kind of a broad term I think people use, so maybe narrow down what you do now for your journaling.
So essentially, basically I have about 10 rules for myself that I will write down before I start trading just to kind of sink them into my brain. I'll take about 15 minutes before I place any trades to just kind of take some notes on market conditions. Because a big problem for me is over trading or over leveraging before I have enough market context. And then at the end of my trading session, I record all my screens, and then I'll basically go back and I re-watch my recordings, and I will make notes about kind of how I was feeling during trades or why I was taking certain entries.
Which sounds like there's a gap. My first thought there is there's a gap. Um, you you need to start journaling in any way or form. Again, it doesn't need to be super clean. Just get it out of your head onto paper. But while you're feeling those feelings,
In the
not
moment.
yeah, later, you're probably missing some. And you make sure you're not waiting for the feelings that are so overbearing that you are making you've lost your good decision making. Uh, try to figure out what are the earlier signals in your body, right? That
Before
you're
we get to
seeing
that point.
before you even get close to that point, because they're there. And if I was playing poker against you, I'd probably see them. So think of it like
Yeah.
that. Think about it
Well,
as
and
if,
I really started noticing that when I started watching my recordings because I record with a face cam, and it's
oh,
really
okay,
eye-opening to just see my body language when
no
I'm in a
pun
trade.
intended.
Like sometimes I'll start as soon as I start chewing on my lip, it's game over.
Okay, so how capable are you of noticing you're chewing on your lip?
In the moment, not very good. I thought that I was actually getting a lot more conscious of when those feelings were presenting themselves. But I have noticed a lot of times where I'm even making following my rules and not necessarily in like a bad trade. But once the pressure gets to me, I can start to crumble a little bit. And it can even be sometimes I'll take a trade that goes in my favor and it works, but by the end of it, I should probably take a break, and I don't usually.
Okay. So that's interesting. So you don't really notice it when it happens, and then it's too late. You got into that zone.
Yeah.
Right.
Then there's definitely levels to it where like I can get either just too confident, have a couple
You're,
trades go in my, not really watching the
mhm.
right things. I just get into the market because I think it's going to go in my favor.
Okay. Yeah, you're hoping that it works. Um,
And that's actually another really interesting one is I've really noticed that whenever I feel like if I get into a trade and I'm like, oh, why did I get into this? It's not going to work. And then I go, oh, well, maybe it will. I'll just stay in it and see.
mhm.
That like that hope's a really bad place to be.
Yeah, it's very common too, and I can empathize with that, not just sympathize. So do you meditate?
I've that's something that I've wanted to start doing, and I haven't really gotten there yet.
So when people, I think when a lot of people are talking about meditating, everyone's like, yeah, yeah, I should meditate because it'll calm me down, it'll center me, et cetera, et cetera. There's a form of meditation, the name is eluding me right now, but a lot of meditation is just being able to train your brain, think of it like exercise, to keep getting back to a center that allows you to control uh, your perception of yourself. Every time your brain's drifting, you're bringing it back to the same place. There's a lot more to it. I'm no expert on meditation. There's another way to do
Interesting.
it where you think of all the body parts on your body and you run for 10 minutes, 20 minutes, I'm saying. You can do it shorter, but lie down on your back, your hands on your side, and just start thinking about your toes. Think about every individual toe. Think about your foot, the bottom of your foot, the top of your foot. Like I could go on up your leg, like literally every little part of your body. So you become very self-aware of your body and how
Okay.
and you can start thinking in terms of like I'm recognizing every piece of my body. And if
You
you do
almost
that,
start
you might fall
tapping into
asleep at
your
the end.
subconscious.
What's that?
You're almost tapping into your subconscious.
Exactly, but it's all about self-awareness. Like people really struggle with being self-aware, which would align with what the problem you're having now. You
That's
are
interesting.
unable to notice you biting your lip, right? For a while, it
Yeah,
was
in the
real.
moment.
I would get I've struggled with my own anxiety issues, and it was hard to start breathing and reduce my tension when that would build. And part of that, those exercises really helped me with trading, um, because when I tense up, I can recognize my shoulders are tight. Like I think in those terms. I'm thinking my shoulders are doing this. My chest is lifted. I feel the tenseness. My body, I start going into
And you
that.
can notice it
Yeah,
in
and
the
then
moment.
exactly, and I can correct it in the moment. And that applies to trading. And
Interesting.
so again, it's not some voodoo. It's literally like, no, do this. Go do that because it's going to help you with recognizing you're biting your lip in the moment. And that's a major reason to meditate, not only to focus, but more so to have self-awareness.
Yeah, because definitely once it gets past a certain point, like I can't make any rational decisions. And I'll just sit there and keep placing trades, knowing full well that I'm making no good decisions. But it's like once I pass a certain point, I'm not even the same person. It's like
And we're all
it's pretty
there.
crazy.
It's the crazy thing is it's almost like once you pass over, and the fact that you are recognizing it means you do have you're on a path there to get through it, but you need the tools to actually do it. And recording yourself is huge. You're already ahead of the game on that. Recognizing yourself is clearly the issue you're having. Yeah, do what I said. Um,
Yeah, no, I definitely will give that a try.
okay, cool. And if you message me later, I'll figure out what that exactly was called because there's some audio tracks you can listen to and they walk you through.
Okay, no, that'd be awesome.
Sure.
Yeah, it's interesting. I've thought that I was really struggling with my edge and feeling like that maybe my edge just wasn't consistent and that's why I was struggling so much. And then once I really dived into it and started doing the work with the journaling and stuff, I realized that it was 90% my psychology. And as soon as like the days where I can follow all my rules and only take my setups, there's no real issues there.
Yeah, if you're seeing, I mean,
But
don't
doing
discount
that
your
is
edge.
very challenging.
It is, and that's where trading gets hard. And um, but again, you're not exercising the muscle that you need to exercise, and you try to go out there in the football field and throw a ball really far, right? Not the exact, maybe it's not a
Yeah.
perfect analogy, but you need to exercise. There's so many little things you got to exercise, and
Well, and
that's one of
I
them,
feel like
self-awareness.
when I wasn't changing anything and I just kept blaming it on like the market conditions or whatever I was blaming on it wasn't getting me anywhere, and I was just running into a wall full steam ahead pretty much.
Right. That's great. I mean, keep don't flip-flop between the psychology and the edge and think, you know, now I've got the psychology fixed and the edge is fine. I'm not saying your edge is fine because I don't know what it is and I haven't seen the stats, but yeah, you keep working on your edge because that's super important. But the baseline is self-awareness and execution, as you know. And I think
Yeah,
you're close to
being able
repairing
to
it.
execute the edge
It's not going to be fixed in one day, but you're closer to repairing it. And once you start,
on the right path.
what's that?
On the right path at least.
Yeah, you are. It's going to be it's not going to be long. That's part of the work. You're recording your face and watching it. You just didn't know how to handle it because it wasn't being fixed just by you seeing it later. So
Yeah,
journal
exactly.
during the trading so you can write that stuff down and that'll even shorten the feedback loop even more.
And that might even help me with my over trading if I set one of my rules to, journal after each trade. It'll kind of break things up a little bit more for me.
And my first thought anytime anyone says over trading, usually the cause there is um, some sort of lack of confidence in the trade they do take. Because if you had a trade that you really know, like I should always wait for this one, and it's nothing else, you'd stick to it. You know what I mean? If I told you that you just need to wait 5 hours, buy this car trunk, and the trunk's gonna open and have money in it, You'd do it.
Yeah, instead of feeling like, why didn't this work?
Yeah,
Why?
and you
Why?
wouldn't run out in the street looking at other cars looking for money. You'd be like, no, no, this car's fine. I just
Yeah,
didn't
no,
think
yeah,
this.
exactly. That's
Yeah.
a good analogy.
So yeah, you're on a good path. I'd like to hear from you as you're going along. Just feel free to message me
Yeah,
if you
I'll
have any
I'll
questions.
definitely reach out. I
Yep,
appreciate the insight.
you're welcome. Trading
Hey, Jeff.
affirmations. Yeah, it's similar. Hey Elvis, how's it going?
Great. Hey, I'm really appreciating this,
Yeah, sure. You're
and
welcome.
this is my brand new first day
Oh wow.
in Blue Sky. Another trader from another room, um, Discord channel, mentioned you guys today, and I came in here, saw what you were, or just look around, see what you guys doing. I love what you're doing
Thank you.
for other traders. I wanted to bring up a similar but different circumstance that I've had for way too long and haven't found a complete cure of it.
All right, let's hear it.
But the thing is, okay, you're in a PA, or you're in okay, you're doing an evaluation. So you're up $3,000 is the target. You're up 2,600 the first day, and a little voice comes in your mind that says, maybe I should come back tomorrow and finish it. You ignore the voice, and then the next thing you know, you're crashing. And doing that over and over and over, and it doesn't matter,
Mhm.
but not having that discipline just to stop and uh, be satisfied with what you have already. But
Yeah.
just
Um,
that one more trade, just one more,
so
and
here's the
then you lose
thing. So obviously you're trading towards your P&L, and I get it, and I totally get it. I'm here at the running this prop firm, and
trading towards your P&L. What do you
you're
mean?
trading towards your P&L, and I know that part of the evaluation and such is all about, I need to meet these rules, I need to meet these guidelines. And so
All
it's hard
right.
to ignore it, and it stresses people out and it gets them going in the wrong direction. There's not really a great way around it because no one's going to just trust us to make the decision of when they're quote unquote done with the eval without giving them a very specific number. Um, so one thing is obviously paying way too much attention to your P&L. But number two is I would venture to say you either are trading your edge or you're taking random trades. So if you see your edge coming
Uh,
out
what
and your
what
strategy,
happens
hmm
when I lose it,
okay,
and like this humble Mike is saying, reset your mind after every trade. I don't put enough time in between trades, and I lose, and then I go into fight or flight, and
yeah,
you know,
I mean for immediate scenarios, I think people find, and I'm sure you found, everyone says they want to set the rule, but following the rule is a real struggle. So getting to more of a getting to the core of the problem there, and I'm not saying core back to like when you were a child, but how you can, and I was talking about this with the last guy, if you can get more towards um, recognizing that you're stepping foot down the path towards that problem, because it doesn't happen instantly. Like you might lose, right? Or you're seeing that you're losing. There's a little bit of orchestration to the time
I've
when you start
lost
triggering.
enough. I'm ready to win.
Yeah, but have you taken any time to one, journal why you're trading? Again, I know a lot of people they hear that and it just goes through one ear and out the other, but it's really a path that's going to help you. Just because you start objectifying what you're noticing about yourself and what you're seeing about yourself while you're in the trade, because afterwards you're going to come up with lots of conclusions of why that all happened. Or, oh no, I really thought it was going to go that way, that you're going to come up with those kinds of things. But if you write
Uh,
it down, you can't argue with that. You're like, no, that's really what I thought in the trade. I'm not coming up with reasons after the fact. But another thing is you can start mapping out signals, right? So you're looking at signals in the market. You need to look for the signals in your body. And these things are happening to every single one of us. It's how FBI agents can tell if you're lying. It's how poker players can beat you in poker. You have tells. And it can be you rubbing your eyes. It could be leaning forward. It could be your hands getting sweaty. You're going to do something physically, your eyes start switching. I don't know. But those things are happening. And if you can catch them as early as possible, you can start to train yourself to divert where that's going to go. Because it starts with the eye twitch, it goes to sweaty hands, and then it starts going into you start looking at other charts or like a trade maybe somewhere else because you want to get that money back or make something happen. And it goes down and it snowballs and it goes to everything you just spoke about. So that's where I would really suggest working on is what is happening during the trade what's something I can actually use as a signal, just like a trade signal, but in my body. What's my signal, or I'm about to go to a dark place if I don't jump in. And then you exercise that and you work on it. Again, journal during the trade, journal after, write what you think about it, and become extremely self-aware about everything that's happening to you as if you were an observer in the room watching yourself.
What are your logistics of how you're journaling as you're trading?
Don't overstructure it. Don't overthink it. Don't think of tools or anything. Open Notepad, type whatever it takes to get it out of your brain. I mean, literally, if you're sitting there and you're like hand sweaty, just type hand sweaty. Just do it. Just do a little bit of it. Don't overthink the tooling at all or what it should look like. Just get it out of your brain onto paper, and then you start becoming more self-aware. Okay, hand sweating. You wrote that again. You're like, oh wait, I wrote hand sweating yesterday. Like, oh, it's happening. And then you start realizing you're like, okay, if I can catch this hand sweating thing, I'm not so down the rabbit hole where I'm gonna start doing bad things. Now it's early on. Now I'm diverting this train. Now I can actually get up and go take a breather and not, snowball. And start there, write it out, start seeing how you can recognize it. Again, meditating helps a lot with being self-aware. And you start getting really good at your hands might always sweat, right? It might always happen the rest of your trading career.
No, with me, it's pulling the hair at the back of my neck.
There you go. So,
That's what mine
well,
is.
it sounds like you know what it is. Now write it down when it happens in the trading.
Yeah.
Okay, that's the step. And start there and watch how that goes.
That is really good. Thank you so much.
You're welcome. Unless anybody wants to jump in real quick, I think that's
One other thing you guys mentioned. You were talking about I think two people ago. You were talking about that the candle and risking a quarter of the candle, and you were saying risking 5 points on NASDAQ. Is that
that's what he was
accurate?
saying.
Do people do that?
That's what he was doing. And I was looking
Not
to see
10
that's
ticks,
about
not 20 ticks, 5 points.
that's what it looked like 5 points, I think he said. Yeah, when 20 points was roughly the ATR in the NASDAQ for a 5-minute candle. So he's risking about a quarter of a candle roughly for a trade.
That's just mind-boggling to me that so much would be risked. Like one individual, he was talking about how you shouldn't really have to risk any more than 10 or so ticks if your entries are correct.
Yeah, I don't know. I don't know if I necessarily agree. It's again your risk should be based somehow on volatility of the market structure, market conditions. What's the market
Correct.
doing? And it really your risk matters based on what's your reasonable target that you're looking for. That risk to reward is really what's important. If you're swing trading, you're taking the entire daily candles, and that's what your volatility is. So really, how much size are you using? What's your dollar risk because of that size, and how much you're risking in points? And you have to. The risk to reward calculations are pretty simple. You have to have enough risk, add slippage into the mix and commissions, but you need to be winning enough.
What I like as a minimum is 20
Right.
point 20-point area to take my trade in. If there's not 20 points of room for a trade, I don't even like to enter.
Yeah, no, that makes sense on the NQ. I mean, I'm leaning towards you on where I'd be taking risk. So yeah, yeah, 5 points is pretty tight. But if you have a system that's working and you're scalping and maybe you're a dom trader, like there's a lot of people in that scalping range where roughly 5 points makes sense on a lot of trades. But when you're looking at 5 points to risk to make a 200
5
points, 300
points,
points,
that's
sure, that'll work sometimes. It's gonna work a lot less because it might go up 30 points and then come back 50 points and then
in
go up.
NASDAQ,
Mhm.
5 points is 20 ticks, isn't it?
Yeah, yep,
Yeah.
5 times the 4. So but if you're taking those really tight risks and you're expecting it to go really far, those are far and in between compared to if it's going to go a third of the way towards your target and then come back below your entry. Like that's common, you know?
What
And
do most of the traders within Blue Sky utilize as a charting system? I
sorry,
mean,
say that one more time.
is there a dominant program or software or uh, charting method that people are utilizing, or is it
For
just
strategy or to
everybody?
determine risk?
No, I'm saying a specific like software or charting company or whatever. I mean, what are most people utilizing for their entry exit assessments?
It's all over the place and it's always going to be a personal thing. No one's going to take all the same trades. I have ways that I like to do it, and I help people do it similar. But most people come with like they see the market in a very certain way, and they've got something, they know they've got something, but they don't know how to organize it and then build a risk reward structure around it so it can
So
work.
generally speaking, what is
Ninja
your
Trader
method?
people, a lot of Trading View people. I would say that's the majority of people using those
What is
platforms.
that?
Trading View is a platform, Ninja Trader is a
Trading.
platform,
Yeah.
Motive
Trading.
Wave. But if
So
you're
you
talking
use
about trading styles, I would say a lot of people are just looking at they have way too many indicators on their screen maybe that they don't even know what they're doing, and they're struggling. Most traders are struggling. So if we're talking about what they're doing, maybe it's not so important altogether.
do you utilize primarily um, uh, candles that have a time frame to them or some other
Yeah, no,
method?
especially for higher time frames, I'm looking at time-based candles. Lower, sometimes I'm looking at volume because it gives me a nice uh, it moves better with the ebbs and flows of the market itself, but it doesn't necessarily, you lose that time component when you use volume. So you can't tell if the price has been holding up in an area for a long period of time. You can just tell how much volume was done there. It's
Right.
really it's very nuanced, and again, I think everyone kind of ends up with their own trading style. But if I had to give an elevator pitch on like what you should do is figure out your support and resistance levels, give trades more room than you think, and develop a way to determine reasonable targets. And then learn to stick to those plans, wait for it to reach your levels, take one trade a day, two trades a day. Only when it gets to your trade plan, learn to plan, execute, and then you can start optimizing that. Go, getting better risk to reward, going to lower time frames. But that would be my elevator pitch of like one way to get started with trading that's effective.
And you use 1, 5, 15 hour, 4 hour time charts or
Yeah, I
what?
would say I plan on hour, somewhere around that range of hour candles. I'm looking for structure. And then I use TPO to kind of finalize the last few days or the last time period.
TPO?
TPO,
I'm
yeah.
not,
Yeah, it's
what's
just another
TPO?
way to look at candlesticks.
What does TPO stand for?
Time price opportunity.
Ah, gotcha.
something to look into. It would be hard to explain. It would be a long
Yeah.
talk.
No, I understand.
Sure. But yeah,
I
it's not the tools though. Like, so don't over obsess about the tools I'm using because it's easy to go there. Because that feels really good to work with tools. Everyone loves tweaking tools, setting their colors, and honestly, it's a way to avoid the hard, annoying, boring stuff in trading, which is just like writing things down, planning, you know, all that other stuff where you're back testing. But it feels a lot better because you never lose when you're just playing with tools. You're just, you're just researching tools and ways to find solutions to your tooling problem. But again, tooling's necessary, but if you get stuck where you're like, oh, which candles to look at, the 1, the 5, the 10, the 15, the 30, like it's all showing you the same information. And you could give me a chart with, just if you gave me a low time frame chart, a medium time frame chart, and a higher time frame chart, just roughly, I could kind of tell you what the market's doing and what I would be expecting for a trade. At some point, it's not really about the tools, I guess, as in the indicators, as it is about learning about how the market uh, auction process works and
fluctuates.
probabilities and how it should move once you've identified areas of the market. And then just learning to trust probabilities and just keep going at it, looking for more edge and trying to work with the market as opposed to try to tell the market what it should be doing.
Thank you so much, Josh.
You're welcome.
Appreciate it.
Absolutely. Just if you have any other questions, you can just send me a message directly. I don't mind.
How do I do that?
In Discord, if you just right click my name, you can message me, or
All right.
just speak in the general future chat and do an @ sign with my name, and I'll respond to it.
Yeah. I feel like a dinosaur when it comes to technology. A lot of times, I just
Yeah, no, I get it. That's probably even more of a reason why you're trying to solve that problem for yourself. Just
yeah.
keep it simple. It's a whirlwind of tooling in this space, so you'll never end. So just pick something. I would pick. What are you using now? Sorry.
Excuse me.
What platform are you using now to trade?
Something that's as accurate as it's so accurate it's deadly. It's called Next Gen.
Okay.
It is so good. It is so good, but
Okay.
it's at nextgent3.com. But it is so accurate, it's deadly, literally. But the problem I have, like today I was calling out, or not calling out trades, but I was projecting what levels would be hit and where it would go next and stuff.
Mm-hmm.
And the guy that was listening in, he has his own method through lines and what you're referring to, that the lines that he draws and the price action and all of that.
Okay.
And I just look at my basically Next Gen is based on Fibonacci lines that are so exact and true that it works out, at a high percentage rate. But the problem I have is the psychology and beating, if I'd get out of my own way, I'd be way ahead of the game. But I keep on doing these patterns of self-defeating behaviors. Like I'm already up $2,600 on a $3,000 account,
Yeah.
and I take myself out of it rather than just stopping. It seems so simple, and yet in the moment, I keep repeating it. So that's my biggest issue.
Yeah. Again, that particular problem, I would immediately say do make sure that you are trading whatever your strategy or edge is. Because if you're getting pulled into a trade, you should very quickly be able to recognize, is this one of my trades that I take? Or am I taking a random trade hoping to win? Am I just taking randomness because it's like, oh, I can, basically confirmation bias? Are you like finding a reason to take a trade as opposed to the market is forming into a way that
So in other words, thinking the market is going to do this next rather than uh, recognizing um, an actual by the rules trade and taking only those high probability trend trade, basically.
Right. My point is, if you're over trading, you're taking trades that you shouldn't take.
Right.
Just by whatever your trading method is. And
Yeah,
if you don't have that,
I've overcome the over trading
okay.
syndrome.
But you do trade when you hit 2,700 out of 3,000, I guess is my point.
Right.
But that either you're taking trades that you plan to take or you're over trading is my point.
The tail spin, and you mentioned the term snowball, tail spin that I get myself into when I lose a trade, it just, come on, I'm better than that. You know. And I
Yeah,
go
but
one
what do I hear? What would I hear from you if it worked out? I probably wouldn't
What's
hear
that?
you. But if the trade succeeded, would you have that same problem with yourself? Would you,
No, I don't.
right?
I
So
literally
don't,
don't. I've
so be
noticed
careful.
that over and over again.
Yeah, be careful there because you are doing that exactly. You are thinking of the outcome of your trade as the quality of the trade, and you're not punishing yourself for taking the trade you shouldn't have just because it worked out.
I understand that.
Yeah,
That's
it's
good.
hard because anything else in our life, especially as men, we've got to, and I say men just because so many traders
I
are.
understand.
Yeah, sorry, I didn't. Anyway, but as you know, if we have a plumbing problem, we're going to go back to Home Depot over and over and over to try to fix that problem. We keep getting the wrong part because the dude at Home Depot doesn't know what he's talking about, right? But you keep going back, and if you just keep doing it, once you fix it once, it's fixed, right? Every time you get a little bit of feedback, maybe the water's dripping less. You're like, oh, I'm going in the right direction. Maybe the water's dripping less again, and that's okay in almost every other occupation. But with this, you can't you can't take your outcome of a trade and have any effect on what's working or what's not working because that's just one piece of a larger statistic. Does that make sense? So really, like, it sucks, and that's what makes trading hard. But you have to be thinking of, I just took one trade out of the 100 that I'm building as a sample set.
Right, a sample set.
Yeah,
I utilize 20 basically, sample set of
that's
20
good. Yeah, that's
rather
better
than
than one.
single.
But
Yeah.
that also means you need to curb your immediate need for, I took a bad trade and it worked out and made me green. What does that mean to your uh, trading career? Do you know what I mean?
Right.
You're not doing, you're taking, that was a gamble that's been added to your statistics. It wasn't something
Right.
that like, oh, I look for this X, Y, and Z. When X, Y, and Z aligns, I do have a little wiggle room of discretion of what I do at that point, but I'm still basing it off of strategy.
Lately, I've traded mostly NASDAQ, and as you know, most likely NASDAQ moves in a heartbeat
Sure.
when it moves in an opposite direction of what generally the pattern would divulge or result in, and so that's where I get caught sometimes
Okay. Well, it sounds like you
in
know
the
where you should be headed with a lot of this.
in
And
the instrument itself.
yeah, the
What?
instrument itself, again, volatility, market conditions are everything. You have to adapt your trade. The trade can't be the same every single time. So if you're on the NQ market and the volatility's up, um, and you're seeing, I'm just hearing that when you say that the NQ moves really quick, I'm picturing you're struggling with tight stops. Maybe your stops are too tight for your strategy during those times, so you're getting stopped out a lot. Would that be accurate?
Um, not for the way I trade. Mostly the I I haven't concretely. I recognize patterns and I trade by patterns. I I trade by rules also, but I haven't done the work to literally say this is the only trade I'll take, because there are so many types of trades that can be taken successfully that I do a basket full of them rather than
Yeah, there's a spectrum of discretion for any trade. If someone found a trade where they just take the EMA or whatever, the MACD crossing over and RSI's here, that if that works, you know, it's just not going to work. Nothing like that's going to be that prescriptive where you can do something that simple and it's just you're good. So when you're planning your strategies, I think, or thinking of your strategies and categorizing them, I think a lot of people think, well, I either have to go all rules or no rules. And it's not the case. Like if 40% of it, 30% of it is like robotic, but the other 70% is your discretion, at least start there. Does that make sense?
I understand what you're saying. Our system doesn't generally work with 30 or 40 percentile. We work with 60 and above.
I just mean in identifying what your trade is and
Yeah.
categorizing it.
Yeah.
You were saying
Well, basically,
you've never gone and done the work.
High probability trend trade has a 70 to 80% success rate if you're patient enough to wait for them.
Yeah.
The pure high probability trend trade, all it does is, let's say it bottoms or tops, and then it goes, let's say it bottoms, then it goes up, and then it's a pullback, and you take the pullback for the rise up, the next rise up. That's like a high probability trend trade. And the exact reverse, if it was, you know, a top, and then it pulls down, and then it pulls back.
Right. So getting pullbacks on the trend.
Pullbacks on the trend.
So I would say look for pullbacks on the trend, but team that with some sort of higher trade. You know, look for how are you finding a trend? Is it any trend? Are you fully basing it off of like oscillators?
Based upon Fibonacci retracements.
Okay.
Fibonacci.
So there you go. You just
averages.
labeled one of your trades. So just put a few attributes on it so you can recognize it, but you don't have to have every little bit mapped out of how you're going to do the trade yet. But do just enough to have it written down.
I know exactly how that trade looks.
Mm-hmm.
The thing of it is like in a 3-hour session, let's say 7 to 10 Eastern, no, 9 to 12 Eastern, or 9 to 11, 2 hours.
Yeah.
That only occurs like the pure ones, the pure high probability trend trades only happen like 5 times each day. And so you have to have patience.
I mean, 5 times is still a decent amount of trades. So my question to you would be, if you see that as something that works out really well for you, if you just wait for it, what confidence are you lacking in that you're not just waiting for it?
I have jackrabbititis since birth almost.
Yeah, I know, but I was saying that to the last guy. I was, you know, if I told you that car over there has a trunk, you know, every other time this car pulls up, the trunk has $1 million in it. You just need to wait for it. Would you go off looking for other cars, or would you be like, oh no, I'll wait?
Yes, my nature.
You would still. Okay.
Yes, I would go look at every car.
Okay. Well,
all the $1 million.
Well, your homework is to figure out what are your signals in your body that are happening and being able to recognize that in real time. So
yeah,
there's your homework, Elvis.
That is an awesome help right there. I appreciate that.
You're welcome.
Signals in body and meditation.
Meditation to help.
The way that you describe meditation, I've never heard of before.
Yeah, that's the regular meditation's great, but for being able to recognize your body signals in real time, the one I mentioned for sure.
Right.
Everyone else didn't hear that. It's about lying down, comfortable, same thing. Arms to the side, but think of every part of your body and move up and around your body very slowly and start becoming aware of every little piece of your body. And if you do
And
that
then
for
I
quite a
think,
while,
and then I think you said the end goal is to fall asleep, right?
you end up, yeah, that's a way to fall asleep. Honestly, you feel like you're floating there at the end.
Awesome. Thank you so much.
You're welcome. All right, guys, I'm
Appreciate
gonna
it,
cut
Josh.
the stream. We'll do this again though.
Appreciate it. Thanks.
Bye.
Bye.